Hey, it's Clay Trader, and this will be a video chart on ticker symbol GST. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to do this time frame. I think does a good job of telling the quote-unquote story of the price. And in this situation, makes mapping out a very logical question quite straightforward. And that question revolves around the fact that today the price underwent a very nice bounce. I mean, when you consider where it was toward its low points to then where it ultimately closed, I think any rational person would say, yeah, the bulls definitely made a nice bounce today. And that leads to the very logical and valid question of, but is there any sort of true power behind this bounce? Is there any sort of genuine strength? Or is this just some sort of knee-jerk reaction or the, the typical dead cat bounce for, trader lingo? I have no idea, but by using charts, like I said, we can make answering that question very straightforward. And in my mind, it all revolves around a single area. And that area on the chart is right here at 49 cents. Why is 49 so important? Well, first, let's just hopefully all be able to agree on the logic that if this is a bounce, well, the price is going to keep on bouncing. If it's a truly strong bounce, the price will keep bouncing. Or in other words, the price is going to make progress forward. The price is not going to go back to where it was. I'm assuming you're saying, hey, thanks, Captain Obvious. Of course, if this is a bounce, it's going to keep on bouncing. But going back to where the price was, that's the contradiction of what a bounce. Exactly. So with that in mind, think about 49 cents. Any sort of closes below there, or worse yet, if the price separates to the downside, what would that be doing into the price? That would literally be putting the price right back to that area of the chart where it was near its low portions. Again, going back, not a sign of true strength. Whereas let's say something like this happens, where the price pulls back a little bit more and then does something like this. What would you have in this situation? Well, you'd have a set of lows right here. You'd have that set of lows down there. If you picture each one of those as stair steps, well, hey, now you have stair steps progressing in the upwards direction. And that's the name of the game. That's what a truly strong move is going to do. That's what a bounce is going to do, right? It's going to make progress forward. So I'm defining the make progress forward and quantifying that statement as staying up above 49 cents going forward. In my opinion, breaking levels of resistance, not a huge priority. So I'm not going to talk about any of those because really, as it stands right now, if the price just keeps on building those higher bases, the chart will take care of itself, which includes breaking areas of resistance. So right now, going into next week, focal point number one should just be healthy consolidation, build higher lows. So we'll see what the bulls have in store. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.